Hello and welcome to a masterclass in getting the right mortgage. This is part one, getting the pre-approval. Today's agenda, we will tell you a little bit about me, what is a mortgage broker, and of course, getting that all-important pre-approval. I'm Steve Lang and I'm a dual licensed mortgage and insurance specialist. I can help you get the right mortgage and then put the protection in place to make sure your loved ones are taken care of should anything happen to you. I graduated from Lakehead University and moved to this great city back in 1995. In 2000, my wife and I started a graphic design company. We sold that company in 2005, and of course I was going to retire, but other things came up. 2006, I became an investment advisor with TD Wealth because I love finances. 2016, I left TD because I just saw that there was a better way to service my clients. I love that I can now offer the holistic approach to my clients' finances. Being a licensed mortgage broker, I can offer mortgages, insurance, and investing, putting a plan in place that makes all three work together. Sometimes the mortgage is part of the investing, sometimes the insurance is part of the mortgage, but they all need consideration. I do my mortgages and insurance in association with Castle Mortgage and Castle Insurance. Such a great group to be affiliated with. 40 mortgage specialists in Manitoba and a fantastic relationship with all the lenders and underwriters makes such a difference in what I am able to offer my clients. Now, these are a little bit of a client testimonial. The one in the middle is my sister. I thought those were very nice words from her, so I put them in there. The others have become very good friends over the years. So, what is a mortgage specialist? Well, we know the questions to ask without the Banksy upsell. No, we don't want to get you the credit card, line of credit, and the mortgage. We specialize in just the mortgage. The banks have 9 to 5 office hours with one solution to fit you into. We diagnose your situation to see what lender or mortgage solution is the best fit for you. We work with dozens of lenders, but generally 3 or 4 offer us amazing service, great rates, and the majority of what our clients need. Now, we also get paid by the lender, not you. Now, 99% of the time this is true. There are special cases where there's a fee on top, but very, very rarely. I also do a monthly budget to show you what your financial picture would look like after the purchase. You don't always need the biggest mortgage you can get. Most people don't max out their mortgage, but live well within their means and are much more comfortable, especially in Winnipeg with the average mortgage size being just under $400,000. Or we look at what it would take to get you into that certain price point. How do you get that $600,000 mortgage? Maybe there's a way to navigate that path. I am licensed by the Manitoba Securities Commission, the same commission I was licensed with as an investment advisor. The good people at the bank might have started last week and are definitely not licensed. I am also a proud member of the Mortgage Professionals of Canada, a great organization that does a lot for our industry and for our clients. So there are 10 basic steps to buying a house. Here they are all listed out in this pretty chart. This is how we would work together to get you the best experience possible, as close to what I call the Disney experience in Winnipeg. But today we'll be focused on the first one, mortgage pre-approval. We go through the application, discuss options, talk about down payment, deposit, closing costs, and what your options might be. Now, first things first, do you have a job? Of course you need a job. You have to have some sort of income. Are you a salaried employee, hourly, full-time, part-time? Are you self-employed? Are you new to Canada? There are programs that apply strictly to these first-time homebuyers. Have you been at the same job for a long time, or do you have a new job but in the same industry, such as a nurse of 20 years but starting a new contract at a different hospital? Maybe an electrician that has ventured out on their own. If you are with a new employer, is there a probation period? We will need a letter of employment from your employer. Generally, the HR department will know exactly what we need. If not, we have some examples on our website. Now, income verification. This is where we see pay stubs, any bonuses, overtime. Was your income higher last year and this year is a little bit lower, or maybe a little bit higher? Were you on CERB last year, and does it impact a 2-year average? We generally need to see T4s from last couple years, NOAs, T1 generals, depending upon the situation. Now, next is the credit check. This will show us a few things. We pull an Equifax or a TransUnion bureau that shows a FICO score. This is important with your ratios. I cover ratios in part 2. This bureau also shows the liabilities such as vehicle loans, credit cards, lines of credit. They now also show your phone, but we don't use that yet. It will demonstrate to the lender how well you pay and keep track of your bills. It shows if you have missed a payment, been 30, 60, 90 days late on a payment, or are you the perfect client that pays all their bills on time? Now, down payment minimums. Down payment minimum in Canada was established by the Department of Finance in July of 2008. The requirement was set at a minimum of 5%. You can always put more down, but not any less. So this example right here, minimum down payment for a mortgage under $500,000 is 5%. On a $350,000 mortgage, 5% is $17,500. Now, as of February 15th, 2016, the government introduced a new down payment requirement for homes over $500,000. This was obviously targeted at the homes in two of the largest cities in the country. The government announced that for home prices above $500,000, a 10% down payment is required for the portion of the mortgage above the $500,000 mark. So this example on a $600,000 mortgage, 5% on the first $500,000 is $25,000. 10% on the next $100,000 is $10,000 for a total down payment of $35,000. Now, for those of you that are interested, in 2012, OSFI announced that mortgages with a home value more than $1 million are no longer eligible to be default insured by the likes of CMHC. This means that any property above $1 million would need at least 20% down payment. So yes, $200,000 on a purchase of $1 million just for the down payment. So now, oddly enough, the down payment can't be from the cash stuffed in your mattress or a found treasure on Oak Island. Not sure if they actually found that treasure yet or not. They might still be looking for it. The down payment must be from funds in your savings, checking, RRSP, TFA, TFSA, or non-registered accounts. We must be able to show a 90-day history via a statement that has your name and account number on it. Now, if you've had the opportunity to get some funds from your parents or grandparents, we can do what is called a gifted down payment. These are funds that are gifted with no expectation to be paid back to the giftor. In this case, maybe grandma. We will need to see the funds deposited in the account, and the giftor will need to sign a letter. Sometimes we will need to see the giftor's account if the gift is large or from out of the country. Now, the funds can be from an RRSP, and up to $35,000 in 2021 can be withdrawn tax-free using the home buyer's plan. These funds will be paid back to the RRSP over the next 15 years. Now, closing costs. All lenders will require at least 1.5% of the closing cost of the house to be shown in an account. On a $350,000 house, you will need to show 1.5%, which is $5,250. We suggest having at least 2% for the extra cost that might occur. $350,000 house, $350,000 at 1.5% is $5,250. The down payment side of it is $17,500 for a total down payment and closing costs that needs to be shown in your account would be $22,750. Now, as I said, the 2% is recommended, and on certain mortgages, 3% is recommended. So what is closing costs? Closing costs will cover expenses including lawyers' fees, land transfer tax, title insurance, property tax adjustment, and GST on CMHC premiums, if applicable. Now, remember I said we'd go through a budget. We will show what your budget looks like after you've purchased your home. How your month adds up after the property tax bill, heating, insurance, food, fun, investments, and mortgages all get added to the totals. Now that you're pre-approved, a couple things happen. I provide a letter that you can give to your realtor so they know that what you are looking for, and if needed, how much you can go on a bid for a house. This letter looks good also when you're bidding on a house. You can submit it on your bid. The owner also knows that you're approved by a Castle Mortgage expert and will be good to go. Now, the next thing to do is find an agent. If you didn't get referred to me from an agent, I have someone that I refer. They have shown themselves to be very professional, honest, and will work hard for you. If you don't go with my suggestion, ask some friends to see who they might have used in the past and how they were. Friends will be honest about their experiences. Now, while looking for that dream home, here's a list of do's and don'ts. Lenders can and will pull a final credit bureau to see if anything is still good to fund. They might even ask for a current bank statement. So on the do side, you can protect your credit score, keep paying the bills. Let me know if there's any changes in your financial situation, and always, always, always put a condition of finance on the offer to purchase. There are other houses out there, and if due to some strange reason we can't get the financing, then you will not be sued and lose your deposit. Also, an inspection condition is very wise these days. In days of bidding wars and people desperate for houses, there are ways of them to get around. In these days of bidding wars, you want to always have that condition of inspection as well. In days of bidding wars, people are desperate for houses. There are many instances of property issues not being seen for a lack of inspection. Now, don't make any large purchases. That new car, it can wait until you've got the keys in your hand. Don't pay off your credit cards. Don't open new lines of credit or credit cards. Don't co-sign on any other loans. And please, please don't quit your job before you get the keys in your hand. Don't laugh. It happens. Now, that's the end of part 1. There's a lot more to talk about, but this is the high-level view. I have more in part 2 that is a little more in depth for those of you who like to see the numbers that back up their pre-approval. If you do have questions, please don't hesitate to call or go to my website, stevelang.ca, and book yourself a time into my calendar to go over your mortgage plans. Thanks for watching.